Hey guys, what's up? Thanks for being here. It is about 2:45. I tried to do an option show today, but I just it wasn't going well. So I was trying to record something to show you guys a trade. I found a great trade. I just can't talk anymore. For some reason, I don't know how to make content anymore. It just kept not working out. So I just decided to scratch it, and I decided to come on a little bit earlier right now and show it to you guys here. So I did remember to share the screen, which is good. So the screen is shared. The trade's in a stock called Rigetti. You guys have heard of that. Quantum computing, according to Perplexity, Rigetti unveiled what it claims to be the industry's largest multi-chip quantum computer. So I like it because it's the right price for running a wheel, because you can run a wheel and the most you can lose is $1,600 if you get stuck with it, if it turns out to be a bad stock. Unlike when you start a wheel on something that's 75 and you do that right before it drops 50% and you lose $3,700, or you suffer a $3,700 loss. But bag holding, I don't like to bag hold. Well, using cheap stocks is one way to get around it. That's not the reason I like Rigetti. It's not because it's cheap. I like it. It doesn't have earnings this week. Earnings are coming up in August. Let me show you what I found out. All right, so God, I just do not like Tasty Trades. I was trying to use Tasty Trades. Tasty Trade needs to buy Option Strat and integrate Option Strat with Tasty Trade. I mean, this Tasty Trade's bad. I just don't care for the visualization stuff. That's just the postman. Hey, dogs. Hang on. I'm going to go see if my ID's here. Nope. Not here. Gosh darn it. Anyway, all right. So let's go to Rigetti Computing. So we go to trade. I love Tasty Trade. I don't like their visualization stuff. I don't like it's called their whatever that is. I know a lot of people love it and it's great. Okay, so I was looking out here. You can see when they have earnings right here, and it's August 14th. I said the 15th. My apologies. You can see the IV for that week is 111. For these weeks prior, you can do a lot better. Especially if you want to buy options, you get a lot better deal out here. I think it might trend up into earnings. I like it. Let's look in, but here's the second thing I wanted to show. So calls are on the left side, puts are on the right side. The yellow line is where at the money is. So going down is going out of the money for calls. And you go 17, 18, 19. You go over here to the column that says implied vol. At the money, implied vol is running 126. If you go out of the money, it's running 150. If you go in the money, it's running 120. Anyway, this has what's called call skew. There's more. The IV is ridiculous out of the money. So the way we try to monetize that is you can go out there and sell one of those calls. Well, the problem with selling a call, especially on a good stock, is you're capping your upside, and inevitably, as soon as you sell it, the stock's price is going to go way beyond it, and you're going to be down, and you're going to even turn it into a loss. Well, there's several ways to deal with it. A lot of people do ratio spreads where you buy an at the money call and sell two out of the money calls. Those have unlimited loss. So let me show you a defined risk way to play it. Let's look at. All right, well, here's a ratio spread, and this is one way to try to take advantage of call skew. You can buy this call, see this 116.5, basically in the money, at the money. It has 115 IV, so you're paying that IV. But then you could sell a couple of these out of the monies for a higher IV, or you could sell two of them. The problem is, then, like I say, if the stock price shoots beyond, you have unlimited loss on the upside. The good thing about these kinds of trades are the stock can go down, you don't lose any money. Ratio spreads are great. They're great trades. But what you can do is you can add one more option to it. You can add buy call and put it an out of the money call and it turns it into a broken wing butterfly, and it defines your risk. And I put one of these on in real life today. And I tried to make content about it, but I just, like I say, I don't know. I just am not able to make content anymore for some reason. All right. Well, this is good enough this is close enough. But you could see when you put on a trade like this, let's evaluate each leg. So we sold two of these 20 options in the middle, 20 strike calls. So they're 137 IV a piece. So you double that. What is that? That's 274. So you have 274 short IVs. So, but then you're hedging that because you have two longs. You have the 16 and a half, one of those, and you have 123. But you can add up their IV. You're getting a deal, and that's good because you're buying low and selling high, right? So this one is 115 IV. That's the 16 and a half. And this one is the 133. You add up 115 plus 133, you get 148. So you're short, what was it, 170 something? So you're selling 170 something, and then your hedge is 150. The difference in implied volatility, just leaving every other factor out of the equation, that gives you a little bit of an edge because you're selling at a higher IV than you're using to hedge it with. Now, doesn't mean the trade can't lose money, or the trade's still going to do what the trade's going to do. But what you do know is the IV on all of these at expiration is going to be zero, or and the price is going to be, well, yeah, the IV. Yeah, the IV will be zero at expiration. The price will just be intrinsic value. In other words, this option right here that you're selling, this 20 strike call, you're selling it for 40 cents, 42 cents, whatever. Um, that's going to be at expiration. That's going to be just intrinsic value. So it's just going to be the amount that it's in the money by. So right now, the stock is trading at 1967. So a 20 strike call would be out of the money. So that will be worth $0. Even if it went to 21, this option would just be worth $1. It wouldn't have any padding in it for anything extra. This one out here that you're buying to hedge, this 23 strike call, is also going to zero. That's what you're playing. You know all these are going to zero to expiration. This is a nice play. It's mildly bullish because you want the stock to keep going up. If the stock keeps going up, in fact, I was trying to show that here. I overlaid this. I overlaid the butterfly. Yeah, okay. I overlaid the butterfly and just having stock right here. The butterfly is the white line, so you can see if the stock goes nowhere, it's the same. It's the same. You're going to make or lose the same thing. If the stock goes up, you make just as much as you would if you just had stock. This green line is just how much you'd make if you had stock. Stock goes up to 21 and a half, so it goes up 27%. You make $453. You would make that in the option trade too. Um, I put a different option trade in. Gosh darn it. What did I do? Is it anyway? I'm just trying to show the theory of it. But you have stock performance up to a point, up to 21 and a half. But the good thing is you have stock performance on the downside too. But you have stock performance with the cap. You can only lose in the two that I was looking at earlier. Oh, here they are. Gosh darn it. Here they are. Okay, so I'm comparing these two spreads. Anyway, you can think of it like stock, but it's stock with the cap on the downside. The most you can lose 150 if you do the option trade, and it has to move the same distance. If it moves down 10%, you're going to lose about 150 in the stock, lose about 150 in the option trade. If it moves down 20%, you're going to lose 150 in the option trade, and you're going to lose 300 or 280 in the stock trade. But if it goes up one for one with stock too. It's the same trade between these 2 points, between down 10% and up 27%. It's just like having stock. Yeah, that's one way to think of it. All right, I don't know what the heck that is. All right, well anyway, gosh darn it. I did have a trade, but I forget. I'm just not very organized. Anyway, you guys can figure it out. Rigetti Computers. It has call skew. Go out there and get you a broken wing butterfly. Try to maybe sell the. I don't know why this is jacked up. Oh, I know because it has stock too. Get rid of the stock. All right. Go out there and sell the 20 or the 21. twice, and then you have to put a long leg, a long in the money leg and a long out of the money leg. Anyway, and mess around with it in option strat until you find the risk and reward parameters you like. This is basically the one I did. The one I did in real life, but basically it's just. I mean, I'm just bullish on the stock. I mean, a butterfly is a debit trade, so it's not really an income trade. It is taking advantage of time decay, though. I mean, or utilizing time decay. Anyway, I don't know. I wish I had that to share with you, but I don't even know where it was, and it was hours ago. I should have come on right afterwards if I wanted to share it. My bad. All right. What time is it? 2:53. I thought I could just come on a little bit early and show it and talk about it, but that didn't go very well either. I've been sitting here watching videos all afternoon. I can't believe how many. Hey, Marcus. Hey, Dan. What's up? Hey, Jackson's right here too. Jackson, say hi. Say hi to everybody. Say hi. He has no idea. All right. Gosh, there's. I mean, I feel good about it. Do you remember when we used to like Alti and people thought we were crazy and people that and oh, but the erosion, and and everything and I mean, it was pretty risky at first, but then after they switched to collars, and I was just like, I mean, we loved it and became my number one holding. Well, it's just I love these Johnny Come Latelys. Now everyone and their dog is on here. Oh, Alti this, the Alti Mafia or whatever, dude. And these were the same people that had no idea and were talking about the erosion, the erosion. I don't know. I just don't like to watch. I know that you guys are on the same team with me, and I appreciate that. This is like a support group for me. I appreciate that. I get so triggered by these morons on the internet. But anyway, all right. But be that as it may, everything did change. I'm just saying it's not just us. There was other channels on there too that other people that we probably watch also that also liked it. But now it's just become, oh my God, it's the greatest thing ever. Well, yeah, tell me about it. We've known about it for years. I think we had Jay on. Well, I was probably the first channel to announce the strategy change. And in fact, the strategy change was partly because of not only us, but other people like us. It was because of all us panicans out there that were griping about all the downside risk. And to be honest, I don't like a lot of downside risk. And I was one of the chief panicans. In fact, I've always been a panican. I've always thought triple QI should sell a put spread instead of just make it puts. Pay about half the, pay 20, 25% or something, but cut off the big downside days. But anyway, all right, guys. So let's talk about some other stuff. Let's go here to the index buffer report, see what's moving. I guess first let's go to I'm sorry I don't have that trade, but anyone that's watching this show knows how to do that trade on their own, right? I mean, it's a broken wing butterfly. It's a fairly standard trade. And I'm trying to dog on Tasty Trade. They just have this, they have this curve thing. And I know once you get used to it, we have Scramble in our Discord, a big Tasty Trade guy. I love Tasty Trade too, but I just I just don't know why Tasty Trade, they have all the money in the world, or IG does, evidently. IG bought Tasty Trade. I don't know why they can't buy, it doesn't have to be option strap, but buy some type of options analytic package. Kind of like Thinkorswim used to be. Thinkorswim is a really good package, but buy something like that, charting analytics, and then incorporate it into here. I would just love it if I could have, because I go back and forth. I see, I'll go over here, and it's easier to go. I can see more. I don't know. I just go back here and visually, Anyway, all right. Well, but I guess we could always Thinkorswim's still out there. I just don't have it anymore. Um, anyway, all right. Well, let's see what's going on. Let's see how my positions are doing. I wonder if I'm back above water today. I was still like $14 underwater this morning when I checked from my starting balance. Come on, and the market's up, higher. I've got to stop being so conservative, and I want to really do better in the second half of the year. Anyway, we'll see. All right. Well, LFGY is doing great. Look at that. It's up 2.2%. GPTY up about 0.5%. ULTY up 1.6%. Misty's up 2%. I have a little bit of that, but not much. YMAX is up 1%. Y triple Q It's down. I saw a great video. It's probably watched me and ripped me off, but he was talking about how you could use Y triple Q to hedge ULTY. I've made multiple things on that before, and anyway, need to get into portfolio visualizer just like I always do, and showed three different allocations and showed, by God, it hedges it, and it certainly does. It certainly does hedge it, not perfectly, but it helps a little bit. Um, All right, so let's go here to the high yield technical analysis. Let's see what's going on over here. I guess I was supposed to look at the darn market. Let's go to the darn market. All right, look at Bitcoin at 119. Man, that's insane. I mean, that is that's a sight to see. ES, that looks beautiful. ES up a little bit more than NQ today. Lots of green on the screen. VIX is down, good, which is good, and VIX bear crossed, which is good. That's good for the market. Happened a few days ago, but VIVIX is, I can't believe my ID's not here. Gosh darn it. Anyway, it doesn't matter now, but I mean, I don't know what I was going to the post office, going to the mailbox and waiting every day for. I was sure it'd be here before time to go. I was pretty sure. I thought it was about half and 50-50, but it's nowhere close. Um, Looks like Vivix is up a little bit, but Vivix also bear crossed a few days ago, and Vivix moving averages are both sloping down. I guess it's longer term moving average. Just the past couple of days, it started sloping up. Well, anyway, that's too granular. Okay, high yield technical analysis. If anyone wants to help me, I need a list, and I've seen one on the internet somewhere. Just a list of what pays on Monday, what pays on Tuesday, what pays on Wednesday, what pays on Thursday, what pays on Friday. And well, then I need to go through there. What would really help is if somebody volunteered to go in here. I have 100 lines in here. I put them in at one point, but I've hit sort since then, and I forgot to include this in my table. So it's unsorted and it was a pain. It took me a long time to put them in, like 2 hours or something, because I go back and forth and then I get lost. But I need to get that going in here. Anyway, maybe I'll do that tonight. All right, so let's sort and see how it's looking. It looks like it's still sorted. Let's make sure. I just don't understand why those three don't work. Anyway, all right. Coney number one, ULTY number two, Carvani number three, NVDY number four. Well, the new formula really the new formula really emphasizes yield and yield max. Look, the top five are yield max. And that's kind of what I was trying to avoid. But on the other hand, these are also legit good performers total return wise also. I mean, but I was just trying to think of a way to balance how I factor in the yield and stuff. I'd feel better if there was some other ones in there too. But anyway, for right now, it's all yield max. Then we have NVDW, that's Round Hill, right? And then Palantir or PLTW is Round Hill. And then we have QDT, it's great fun, that's Round Hill. OARC, SMCY, MSTY, AIPI, and TSMY. Now, TSMY has earnings right now, I think, right? So tomorrow we can see how that did. We can see how that did tomorrow. All right, so let's look at. I don't know. What do you guys want to look at? I'm out of ideas. Hey, Red Sox, how are you doing? Blocks is bloxing again today. Well, I like to see that. I need to get that in the darn portfolio. Yeah, blocks and SPUT. I know you love them. And unfortunately, the new formulation knocked SPUT off the list. But that's what I'm saying. I wish the formulation wasn't so tied to yield, because yield is really, can throw you off quite a bit. And now I'm afraid with the new formulation, something like SPUT, which is a great fund that just pays 6%, will never make the list. Let's see what the lowest paying let's see what the lowest paying one is. Okay, so we have Coney at 112, because I could just not even make a metric and just sort it by yield. And we could just, and that's what a lot of influencers do. They just like the ones with the highest yield because they're just trying to get the dividend snowball working, and they don't understand how it works. And anyway, but we have Coney and Alti, then we have Carvani at 78, NVDY at 66. These are all gigantic yield. NVDW at 35, so that's kind of the lowest one. And then we have QDTE is 40. That's kind of low. AIPI is 37. But I don't know if with the new formula we're ever going to see, MSFY. And MSFY was leading on the other formula. And I can see why. It's 1.5% above its moving average, and it's 4.6% above its 50-day moving average. That's a long way, especially when you just consider it only moves, it doesn't even move 1% a day. So that's, 6-7 days above the moving average. So that's why it was on there, because it had strong price momentum, which is an element to it. At the same time, you only had a 13.18% dividend. So now it sits down here at 27%. So I guess let's go to the tiebreaker. So number one is Coney, and then we'll put in MSFY. Did one of you guys text me? When I get a text, I'm nervous. I'm not sharing the screen. I'm not, am I? I can tell. I'm not, am I? Oh my gosh. I thought I said I'm going to share the screen. Did I? You guys heard me say that, right? But somebody texted me. So that means I'm not sharing the screen. I'm sorry. I swear to God, did you not hear that? Right here. I swear to God. It says sharing the screen. So it's sharing this screen. You guys can see that. No one's saying in here I'm not sharing the screen, but generally when I hear my text go off, I just don't want to go up to get it. Generally, it's somebody saying, hey, you aren't sharing the screen. Yeah, it's not sharing this screen. You son of a gun. All right. I'm just not having a good day. I don't know why this has to be so hard. It says sharing the screen. Here, I'm going to stop sharing it, and then I'm going to hit hello. I'm going to hit share screen. I could swear I was sharing the damn screen. Anyway, whoever texted me, thank you. Yeah, I heard it go off. It's never a good sign when you hear the text thing go off. So I go over here. Okay, it's sharing it now. It's sharing it this time, right? I'm going to go check just to make sure it's not an emergency or somebody else needs to get a hold of me. No, it wasn't. Okay. Telemarketer. All right, but it didn't look like I was sharing this other screen, so that whole time I was showing stuff on Tasty Trade or whatever. Okay, but back to high yield technical analysis. So the lowest one that's the highest, if that makes sense, would be MSFY, and I'm fine with that doing well. Let's look at. Now I'm getting a call. Telemarketer. All right. Let's look at. Let's just look at the last quarter. Jax is looking at me like, aren't you going to answer that? All right, let's just look at the last quarter and see how much better Coney looks than MSFY. So, so Coney should definitely, in a list that's supposed to be the best, Coney should be ahead of MSFY. So I guess that's cool. But MSFY is good also. You can see it. There's nothing wrong with MSFY. Just it all. That's why I always say it depends on if you need income. So let's just say person A wins the lottery and he does a scratch off and wins $5 million and puts it in the VU, and person B has, well, I don't know, let's not say that. But I'm just saying, if you don't need income, don't mess with high yield covered calls. I'm just saying, if you have a good job, I wouldn't even mess with I wouldn't even mess with these. Just, but if you have a good job or a wealthy family or something, um, but these really come in handy. The really, really super high yield ones to me come in handy when you have a little bit of money already, but you maybe don't have a lot, and your wife's trying to quit work or something, and you actually have a need for it. You could actually, or let's forget, even if you don't have a wife, let's say you win a scratch off and it's $100,000, and that's not a lot of money, but you have $50,000 in credit card bills, and you want to, but you also have a retirement fund, at your work that's worth half a million or something. Well, keep your retirement fund at your work. Maybe put the 100,000 in high yield, and get it and pay off that, and get it until you pay off the debt, and that would be wonderful. Something like that, but where you actually need the extra income. Because I just don't like capped upside, as you guys know. I'm like a broken record. All right, back to this deal. So what I'm trying to really say is, the wealthier you are, the less need there is for high yield. I mean, really, why do you need to earn 80% and have all, if your income needs are already met? I mean, if you're wealthy, you get MS. I mean, for me, if I'm wealthy, I would get MSFY, and if I'm like I am, I would get ULTY. Because I mean, you know, back here to this thing though. So MSFY is 13%. Then we have Maxi at 25%. RDTE at 40%. Then we have some good solid ones, kind of middle of the pack down here. GIAX is a good solid middle of the pack one. Fibby pays 50%. There's Will. Will's down there coming in at 13%. That's nice. Infly's at 45. I wonder if if at the bottom of the list is going to be all the lowest paying ones. And that's not what I wanted the list to be. But let's go to the bottom 20. Now we're going to get some inverses and some bad stocks like Murney that pay really high because the stock's down or because it's an inverse. But by and large, just the normal ranking, it's not all the super low ranked. That's 12, 30, 30, 40, 90. I mean, there's some higher ranking ones down here, XYZY. These are just ones that have fallen out of favor. GDX, there's nothing wrong with XYZY. It just, other than the fact it moves 3% a day and it's less than 1% above its 50-day moving average, and it's under it, or it's right at its 20-day moving average, just as a lack of momentum problem. Nothing wrong with Tesla. I mean, with the stock, it's just Tesla. You just have lack of momentum here. You just have a super volatile stock that's trending downwards right now. That can switch in a hurry, though. But it does look like, let's see, the super high ones as far as triple digits go. Let's go to the top of the list. There's the top of the list. So if we count triple digits as super high, which it is, in the top like 15, we have 4 of the super high ones. 1, 2, 3, 4. Let's see in the next group of 15 how many we have. None. So that's it. I think the super high, well, there's a super high right there. There's 170% payer on AIYY. It's kind of mid pack. I'm going to say the super high ones are going to be either going to be at the top, if it's doing well, or at the bottom, maybe if it's in something like Murney that's trending down and its yield is up, more of a function of the stock going down than really that, or same thing with fiat. Nothing wrong with fiat. Its yield is so high because it's painted on a decreasing base of stock. We could put in yield on cost to try to maybe I should put in yield on cost, but anyway, There's all kinds of stuff I could do with this. I'm still just not totally 100% happy with it. That's why I keep showing it to you guys, and then I call BS on it myself, and occasionally one of you guys will call BS, or somebody will make a comment on it and essentially call BS. But I think this is less BSy, it's less stinky than the last version of it. So I'm going to stick with this for a while. Um, and I wonder if I'm just making it too complicated. I wonder if we couldn't just take the yield and divide it by the beta. So the beta right here is 3 on Coney. I mean, it's 3 times as risky as the SPY. Divide 3 into 112, and you could just get a number, the metric. And then you could look at something that pays the same, like Coney, that has half the risk. So it would have a higher number. Um, so I'm also wondering if I need to just factor this stuff in. But the problem is, if I just do it like that, then it'll still put stocks in there that are going down. I had to put in something in there for technical analysis to try to monetize momentum. All right. Well, anyway, I don't even know. Can you guys even see this? Yeah, there it is. Stop sharing. All right. I'm just going to talk with you guys. Is NVYY on the list? That's a great question, Dan. And let's look into that. We need to look into that like once a week. And I have a list of that list. So check this out. When you go to the bottom of the high yield technical analysis, to be announced. So these are the dates that they hit their 3-month anniversary on. So you said NVYY, is that right? NV. Give me the inception date, and I'll put it on here to remind myself. Let's see here. NVYY. Okay. Well, yeah. Give me the inception date, and I'll put it on there. We'll make sure it gets on the list as soon as it's eligible. Has to be 3 months. 1730 is your average yield max cost. I'm trying to catch up with what you guys are talking about. Hey, Froggy, thanks for being here. Second day in a row. Do you see any reason to invest in YYYY? We can look at that. I want to get on top of this NVYY thing real quick, since I'll try to answer one question at a time and not weave so badly. Let's get in here to FinViz and let's check out NVYY. Maybe he met NVII. I always say, no, there it is. It's Granite shares. Okay. So is there an NVII also? I thought I saw that on my chart. Okay, it's Rex. Okay, well, let's check out Granite shares. These might be 3 months old. These have been out for a little while. Like, they're getting close. So inception date is June 11th. So we're looking, or I'm sorry, that's the dividend date. Inception date is May 14th. So we're looking at August 14th, right? June, July, August. May, June, July, August. So we'll go back over here and I will put on here August. I just added 2 last night. I added from this list, I think I may have taken them off the list, but there's a couple new ones on there. Baggy, I think, well, yeah, Baggy and Biddy ought to be on there because that's July. Oh, wait, no, that hasn't happened yet. Okay, Baggy and Biddy are coming up. Goldie, I put Goldie on the list last night. I put Goldie and Chippy. And I remember now. Goldie and Chippy are now on the list. So let's just take them off of this list. But anyway, I'll stay on top of that but I'm counting on you guys to help me stay on top of that also. For instance, on September 27th, we'll put blocks on there. Put BITY on there. All right, and the second question was about because I didn't want to weave too far, and I've already forgot what it was about. Let me go over and try to reacquaint myself. The second, oh yeah, it's YYYY. Do you see any reason to invest in YYY? What in the hell is YYYY? No, I think I know. I've looked it up before. I just can't remember. Maybe it's YYY. Yeah, and I have looked this one up before. I think that's what threw me off is the 4 Ys. Well, let's look at it. This one should be in this. We should put this. Let's put it in the max factor real quick. It could be in the max factor. 12.3% dividend. Performance for the quarter, 8.6%. It's at the 20 period moving average. It's slightly above the 50 period, but of course we have to figure out how far it moves to figure out if that's really that impressive or not. I mean, it's a lot more impressive for something that moves 1% a day to be 10% above its moving average than something that moves 5% a day to be 10% above its moving average. It's like five times as impressive. So anyway, but the computer can figure all that out. Let's just go slap this in. I'm kind of embarrassed why wasn't in there yet. Let's just add a row below. Why? You're asking yourself why did I get this? I don't know. I thought that was kind of funny. Let's see, inception date. We don't need that. I mean, oh, it does. It needs to do that for the dividend. It needs. Doesn't matter what it is. It just looks and sees if it's over a year. But for accuracy's sake, I want to put the right one in there. So it was the inception date was June 12th, 2012. All right. I wonder if I have to type it in there in the same format. Probably. Let's make the okay. So look, they got the yield calculator right. Well, but yeah, okay, they should. But then over here, it doesn't have the risk factor. Why doesn't it do that? Oh, it's because I know why. Hang on. Copy, paste formulas only. Okay, there's a not a very risky. Look at that. 74 means 75% as risky as the SPY. That's so not very risky. That's good. Now let's sort it and then see where it ended up. All right, we'll see where it ended up. I'd expect to be mid pack just based on kind of what we were looking at, and sure enough, it's maybe mid to low pack. So why? So 12% dividend. It's right at its 20-day moving average, just above its 50-day. Only moves two-thirds of a point today. So being a percent and a half or 1.38% above means it's 2 days above its moving average. So, you know, it's not a weekly payer, is it? I'm sure it's not a weekly payer. And who was it from? Amplify? Anyway, well, there we have it. We'll keep an eye on it. I mean, I have a lot of these. I have these funds that are just because it's highly ranked. Like I have GDXY. It's not ranked highly right now, but it's in there for another purpose. It's not. I'm not only trying to play momentum. So there may be tons of reasons to get YYY. Just the fact that it's not in here. This is only going to show the cream of the crop. If we're looking at 100 ETFs and comparing them with each other. So to make the top 10 is, it's going to be pretty rarefied air. You're going to either have to have a lot of total return, a lot of yield, a lot of both, and manage risk pretty well. Or not even that. The risk really doesn't factor in that much. But you're going to have a lot of total return or a lot of yield, and you're going to have a pretty serious uptrend. I mean, look at Alti. Alti's 2.2% above its 20-day moving average, and that dog YYY was even with its moving average. Think about that. It's getting beat by Alti. I mean, which is awesome. That's why I like ULTY. Now, ULTY moves 1.7% a day, so being 3% above its 50-day moving average represents about 2 days worth of action, but that's not nothing. That's some pretty good momentum there. And then you factor in that momentum with the yield and with the total return. The holy grail factor is the NAV return. So the NAV return just by itself in ULTY is 11.5 for this quarter. I mean, that's good, even if it didn't pay a dividend. 11% for a quarter, but then, then you factor in the dividend. So I think I like the new formulation. These are more the stocks you guys are talking about. And I mean, don't a lot of you guys like NVDY? And I know a lot of you guys like Round Hill. And I know we have a lot of Palti and PL and a lot of round, yeah, a lot of round hill weekly payer guys out there. I just need to get a handle on this. So like this one right here, round hill. This one is a weekly pair. What day does that pay? It's Thursday. All the round hills are the same, right? I think they're Thursday. If that's not right, put it in the comments. Hey, Mark, how are you doing? Yeah, SPY is only risky if you don't trade. Well, SPY, another thing is SPY's risk is just a benchmark too. It's it's a good way of thinking of an overall. It doesn't it just is what it is. It's I'm not so much when I'm talking about beta. I'm just talking about that something else is twice as risky as SPY. But yes, that doesn't factor in what you're doing with it for sure. And yeah, nothing's risky if you manage your money right. I mean there's something called the Kelly criterion where you have to where you bet you make your I say bet your investments in the same size as the advantage that you have in the trade. But anyway, they usually use it for football bets and horse races and stuff. But you can generally there's an optimum number to bet, and even if it's something stupid risky like football games, you can bet according to this theory, 1 or 2% every time, and you should never run out of money. But of course, but that's also because you keep betting less and less as your bankroll goes down. But but yeah, you should if even if something's super risky, if as long as you use less of it, because you don't want to make a 500 to 1 bet with your whole bankroll, but you make a 500 to 1 bet with 1% of your bankroll, and that way you guys get that theory. I mean, anyway, what did you do, Mark? You sold all your PLTY pre-market and bought Morrow, man. I'm getting why? Okay, I guess when does Morrow get on there? Let's make sure I have. Okay, Morrow's inception date. Oh, has it been out? I didn't realize Morrow's been out that long. Is Morrow on the Max Factor? Why don't we ever see it? Um, I just don't think Morrow's on here. I thought it was newer than that. Huh. Yeah, I don't think it's on there. I guess let's put Morrow on there. All right. And what was that inception date? It was December something last of 2024. Yeah, December 10th, 2024. All right. Well, let's see how Morrow, just out of curiosity, let's see how Morrow, what do you guys think the beta is of Morrow? I'd say it's Bitcoin mining. So I'd say 1.5 if I was estimating it, which I have to do if it's less than a year old. Oh my gosh, it's saying, what am I talking? Gosh darn it, I'm just having a bad day. It's not been out since December of 2023. It's been out since December of 2024. Gosh darn it. Well, this calculated, okay, so the dividend is 82%. So that's right because it really is only 50%, but it's been out, at less than a year. Okay. So this right here, let's give it a 1.5. And then when it turns a year old, we'll put it on here. Okay. So now let's just go look at its max factor. Its max factor is 0.25. Let's see what 0.25 will get it. I bet it's pretty good though. I have Ybit on there twice. I should have put Maro in and Ybit's slot. There's that old YYY. Something screwed up. I didn't. Did you guys see Morrow? Okay, there it is. Morrow's right here between Maxi and RDTE. So it's like 20 something. I mean, 82%. It's 1.2% above one moving average and 10, or no, just 1%. Yeah, and 1% above the other moving average. No, I was wrong. It was right the first time. It's 12 above one and 10 above the other. Now let's make sure that that has that. That's incredible. Oh, yeah. Okay, that's right. This is right. 12 and 10 above its moving averages. That's incredible. Now, this moves a lot on a daily basis, though, right? Let's go find it again. All right, Morrow's right there. It's on line 27. It's not number 27. I need to maybe number these. That'd be great, wouldn't it? So it moves 4.3% a day is the bad news. So it's not a huge deal that it's 12% above its moving average, but that's 3 days. I mean, it's doing better than why the heck did I get this fund name why, right? As far as momentum goes. And why pays what? Was that 12, 13% dividend? And Morrow pays 82. So Morrow should definitely be ranked ahead of why. I mean, Morrow's right up there with Maxi. So let's look at the DeFi ones that are up here. We have to choose from. We have Morrow, Maxi, Hui. We'll call that DeFi. Morrow, Maxi, Hui, LFGY, YBTC, right together. That's good to see. Um, I forget what SEPI is. SEPI's AI or something, right? Or or SEPI. I don't know. FEPI, GPTY. I thought GPTY, FEPI, and SEPI were kind of alike. I think they are. Palti, TSMY, AIPI. But then we have Misty. We also have Misty up there from the DeFi world. And then Coney's definitely DeFi. And then ULTY has some DeFi exposure in there. So yeah, I think the new max factor is pretty good. I just need to get the dates because then we can pull up a list every morning and we can look at the top lineup for the weekly pay. You know, these people that want to get paid every day of the week. I'll have it, and I did have it working like that for a while, but where it'll show the top 20, then it'll show the top five fund families, and then it'll show the weekly pay lineup where it'll have the top weekly payer for each day. And I think that might be fun. I think when I first started doing this, there was only one on Monday, and it was Week, WEEK, or maybe it was Wednesday. But Week was kind of weak. Week was like WEAK. I mean, from what I remember, and I think I ended up taking it off because it didn't even pay 6%. So let's look at Week real quick. Anyway, if somebody has a list where they have all the paydays down on a, you know, broken out on a chart, all because not the monthly ones, those those are different, but just the weekly paydays. So yeah, this one right here, I mean, it's paid 1.4% March, so March, April, May, June, July. Yeah, it's too low. It's gonna pay what a T bill pay. I mean, it's gonna pay probably what the 10 year is, right? Or they don't invest in 10 year, but it's gonna probably pay 4% or something. Whatever you get. Well, here we have it. T bills. So they have, let's see their expirations. These are all T bills. So these are ones that expire here in the next month or two. They have some August, some September. That's the latter. I can't believe those pay so well, but those I mean those pay pretty high. Yeah, weeks like SGov. And there's nothing wrong with it, but it was just too. I want to, it wouldn't even make it in the max factor anyway. If it paid that low, it's just the way the max factor figure is just going to be one of the low ones. Doesn't mean there can't be can't be a place. And I'm sorry, I'm trashing why if somebody likes it. Okay, you're right. It's closed in funds. So that's the other thing. I forgot about that. It's not even covered calls. So it may not be fair to even have it on this list because we're trying to compare other covered call stocks. But if you're just looking at it, it does. I mean, it is a stock or an ETF. It moves up and down. It has price action. It has moving averages. It has a yield. So it may be great in the closed end fund world, but when you look at the price action and you look at what it pays, I mean it'd be middle of the pack if it was in the if we're comparing it with other covered call funds. Um, it may not, and it may not be fair to compare a closed end fund. But anyway, I'm just joking. I'll quit saying why did I buy this? I was just joking. I just anyway. Okay, closed end funds are getting the attention they deserve. I think ECAT from Block. Okay, yeah, but kick ass. So here's the way I talk about closed end funds or income generally. Financial advisors tell you 60-40, and I think that's a good idea. Um, it's a good idea, especially in retirement, even 50-50. Because you need more income in retirement because you don't have a job anymore. But sticking with the 60-40, so you wouldn't want to go 40 in these covered call funds. You wouldn't want 40% in ULTY. I wouldn't want 40% in ULTY. I like ULTY. For one thing, I don't need that much yield. I mean, that'd be, you know, on $1 million portfolio, it'd be $400,000 worth of yield every year or something. It'd be because it earns about 100%, 80%. Now, granted, it wouldn't quite be that much, but it'd be a lot. But I think the way to handle that is use things like Alti, maybe for 10% of so you have 60% in VTI, whatever. You have 10% in a bond ladder where you're buying bonds, or you can have a money manager do it for you, or get a ETF or whatever. But 20% in bonds, maybe 10% in covered calls, and maybe the other 10%. What about REITs, or what about closed-end funds? What about mastered limited partnerships? What about pipeline? Whatever, those are limited partnerships. Yeah, I mean, you want your yield, your sources of income to be diverse if possible. Even though bonds are great, you don't have to go 60-40. You could go 60-20. So stocks, bonds, and then maybe put 10% in high yield corporate bonds. Or maybe if you're wealthy, put 10% in municipal bonds because they have no state tax. If you're wealthy and you live in California or New York or New Jersey or somewhere where there's a lot of state tax, um, it can make sense. So there's a jillion different ways, or not a jillion. There's lots of different ways to get income out there in the market. And then there's just stocks that pay a dividend. I mean, and that can be good too. But the ETF that kind of represents that would be an SCHD or something. So there's a lot of choices out there. Don't fall in love with the cover calls. That cover calls are risky, but they're also rewarding. But they're really tied to the market performance. So I mean, I always say the less is more. Just think about it. Thinking if you have $1 million retirement, you're 60 and you're getting ready to retire, and you've saved up $1 million, and you didn't really save up all that. A lot of that came through appreciation because you put in a little bit with each paycheck, and the market's tripled in the past 15 years. So um, but and you're getting ready to retire. Well, yeah. So you aren't going to put 40% in ULTY. You maybe put 5% in ULTY. That's $50,000. That's right there. That could pay. I mean, that's pretty good. Then put the other 5% in a stable high yield fund, maybe MSFY. We were just looking at that. pays 13%, but it's, um, and then so you have 10% in high yield, and your average return between those two. So you have $100,000 and you're making 80 in Alti and you're making 10 in MSFY. So you average that out, that's 45. So, there you are, you're killing it. That's $45,000 income. That's nice in retirement. Um, but then you still have $300,000 of other dollars to invest in other types of fixed income. You could buy some of that YYY. You could buy some closed-end funds. You could get some master limited partnerships. You could get some REITs, and don't forget government bonds. But yeah, that's the thing. That's why we say these work better when you have larger amounts of money. Because once you've saved up some money and you have some money that you can allocate to this, these aren't great growth vehicles, but they're really good vehicles once you've got the money, in my opinion. All right, what else you guys want to talk about, if anything? But I'm not trying to trash closing funds. I try not to talk about stuff I don't know anything about, like bonds. I don't talk about them. All right, so let's see here. Well, ULTY is not for everybody, but yes, I'll agree. Closed-end funds aren't getting the attention they deserve. That the guy that wrote that book, Income Factory, he has all kinds of social media, and follow him. If you're into closed-end funds, there's people out there that are experts at them, and it's definitely not me. Okay, is ULTY a great fund? I like it, so I'm talking about it for me. But yeah, I also gave it out as an example of something that's very risky. But yeah, I think it's one of the better funds out there. But it may not be for you. It may not be for you. And I'll say this: if you're concerned about the NAV, don't get ULTY. It's not. It's an income product. Or but yeah, I think it's one of the best ones out there. What I like about it is I'm outsourcing my trading. That's exactly how I like to trade when I trade. But I don't want to follow 20 stocks and stuff. I can't do it as well as I can't do covered calls on 20 high yield stocks. I could maybe do covered calls. I'd do a poor man's covered call on maybe two or three of those, and that'd be about the best I could handle. But they're just doing it better. So yeah, it may not be for you if you don't trade covered calls and you don't want a lot of risk and stuff. Yeah, it definitely may not be for you. Brad, I mean, what do you think? You guys weigh in. Do you guys? Is anyone in here like ULTY or? Okay, Brad, what are you saying? Closed-end funds have a wide variety of diversity. Some, yeah, and the closed-end funds within them, don't they? They have real estate closed-end funds, and they have ones that deal with oil, but through pipeline type stuff, and then they have yeah, they have bank loans. Yeah, they have everything, so you can get in different sectors of the economy. I'm just saying, stay diverse. Yes, I do like ULTY, and I like the heck out of ULTY. I think it's one of the better ones out there. And I'm not concerned about the NAV. I'm concerned about the total return. But I know what the NAV's doing, and that's the whole reason for this max factor. So this max factor has ULTY ranked second. Well, we have all that. I mean, so here's the yield. It's 115%. But right here, A factor and B factor, this doesn't have anything to do with the yield. This is just price momentum. This is the price is going up. So you say the price is declining. Okay, well, yeah, I guess so, but not on the 20-day moving average, not on the 50-day moving average. It isn't. I'm just looking back at the last quarter. But yeah, if you look at since inception, ULTY's NAV has not done great. But I'm focusing on this quarter, and I'm comparing it with other high yield stocks. And so you can see right here, it's doing just as well as it's doing better than Carvani. It's not doing as well as NVDY, but yeah. So I mean, yes, for me, I really like ULTY. I like this high yield. Yeah, and I like it. And mainly, I like what they're doing. It's out. I like that. I like what they're doing. So, but it's definitely not for everybody. If you expect the NAV to go up, do not get ULTY. Don't get any of these. The NAV's not going to go up on any of these. I mean, and if it does, it's just. I mean, it's not going to go up as much as you're going to want it to. I mean, these you don't get these for the NAV going up. Um, all right. All right. So, okay. So, yeah, Mark had it and then dumped it, and yeah, and Mark had some of the same things. He was disgusted over the NAV, but then he got back in recently. Not a huge fan. Anyway. Yeah. So it's a personal decision. I mean, it's a personal decision. So let's see. You say you only use yield max for income invert. I love the inverse funds. I love that. That's a great idea because there's no other way out there. Yield max is the only one that has this right now, where they have a way to give yourself a hedge to bet against the market, but at the same time they'll pay you a little bit of a yield. From that, that's in no, that's good, and I think that's fine. And yield max aren't for everybody. Let me ask you this: do you like round hill, or do you like? I mean, do you like any of the yielding funds at all, or is it? I mean, if you don't like yield max, I'm guessing you don't like Defiance either. But some people don't like yield max, but they do like Neos and Round Hill and other ones. There's something for everyone in here. Okay, Mark, at the current price, I buy shares when I have an extra $15 or $20 to buy. Yeah, that's nice. Okay, so Brad says he's had ULTY. Just letting it drip. Me too. Me too. But yeah, there. I mean, so let's maybe I should make a new model portfolio. Say 60% stocks, 10% covered call funds, and then 10% your choice of bonds, closed-end funds, or master limited partnerships or business development companies, whatever. And that's your choice. Talk to your planner. If you're wealthy, if you're in the top bracket and you live in New Jersey or New York, maybe some 10% municipal bonds. If taxes aren't as big of a concern, maybe you can get some closed-end funds and some other stuff. I'll tell you this. I mean, I don't have anything against closed-end funds. CLM is on here. CLM is the granddaddy of closed-end funds. But let's see how it's doing. Now let's see if it's. I don't know that it's doing as well as these others, but I mean, but I know a lot of people like it. To be fair, CLM they have rights offerings. I don't have any way to figure out how much extra you get from the rights offerings. So I'm just looking at the price and the risk and stuff. But let's see how CLM's doing. I haven't noticed it on here in a while. There it is, 78th place. So, I mean, 15.8%. I mean, that's pretty good. That's really good. I got the inception date screwed up here. What the heck? That's fine, though. I'll fix that later. So it has no short-term momentum. It's right on its moving average. But longer term, it's up 7.2% above its moving average. So I like to see that. It's trending up, at least this quarter, let's just say. Very low risk. It only is it's half as risky as the SPY. And like Mark pointed out, the SPY is not risky if you know what you're doing with it, But anyway, but it's half as risky as the general market. Half as volatile. Let's just call it volatile. Maybe I conflate risk and volatility too much. I probably do. But yeah, I mean, it's an all right fund. I mean, it's all right, but it's nothing special. But I don't have anything against closed-end funds, or I shouldn't say that. It hasn't done anything special this quarter. If you look at CLM since inception, it's 5-star ranked, and it's done great. But remember, I'm trying to make allocation decisions for. I want to be in what's hot now, And I mean, how did I miss PLTY? How did I not get in that a few months ago? I mean, and I would have if I'd been doing this. I just didn't realize how good it was going. But yeah, they aren't for everybody. So yeah, but I'm going to come back to what I always say: just use as little of the high yield funds as you need to for the income you need. And if you can also get income through closed-end funds, REITs, business development corporations, or master limited partnerships, or if you're wealthy, municipal bonds, all the more power to you. All right. So what's Guardian talking about here? Thoughts on Dividend Hook website estimate? I haven't seen it yet. Let's take a look at it. There's so many of these, I can't keep up with them. All right. Well, let's just go ULTY. Unsupported. Okay. Well, I don't like this guy. This is bunk. This page is BS. If they don't have GPTY on here, no, this page sucks. Oh, they do have GPTY. Okay. I'm totally joking. This is awesome. I can't believe this. This is awesome. Now, I don't know how sophisticated I wonder if they just take an average, but you could take the average and then use the average implied. I tried to do this once by just estimating them from the implied volatility. I don't know. But anyway, I think this is fine. I mean, it gives you something else to look at. I love it. Yeah. Now, what I want to know, do they have a weekly battle? This is what I need. I need to go down here and see if, yes, I can use this right here, but it doesn't have the days, does it? Gosh darn it. I found another site. There's another site like this that has the days and it has a chart, and it helped me to get my stuff organized. Yeah, I mean, I like this. Very good. Is this yours? Is this your page? If it is, you did a great job. I love it. I love it. Um, all right, let's see. Mark agrees with me. We agree about a lot of stuff, but not everything though. Exactly, Max. You have to stay on. Yeah, you have to stay on top of things. But yeah, I like that dividend hook. If it's yours, that's fine. That's really good. Maybe we'll start looking at that next time. I want to figure out just real fast if I remember the symbol that we might just go look just real fast what something pays. Yeah. Yeah. So what time is it? 3:48. All right, I'll let you guys go. There's still 9 of you guys here. I appreciate it. I really do. And I like to talk about. I love to talk about high yield funds. We usually don't get. We usually get people on here. I'm usually preaching to the choir, so it's great to have people on here that have other ideas. I don't ever want to trash closed end funds. Closed end funds are awesome. I guess I don't know much about them, but they sound awesome. Um, I know CLM's awesome. All jokes aside, I follow influencers too, and I like that Todd Aiken guy, and I followed him for years. I'm even on his Discord, and it's a pay for Discord, but they asked me to be on there because they like me. Anyway, I'm kind of friends with him, but he's a big proponent of CLM. Let's see, CLM and then UL. Or, well, let's just look CLM versus the SPY or something. Okay, that's just for this quarter. That's fine, but let's go for 5 years. That's really impressive. That is really impressive. You can see you're leaving some money on the table. You're up about 50% of your money on the table, but guess what? That's what happens when you do income strategies. It doesn't, and CLM's one of the better ones, and that's over a long period of time. So, but we could even look at over a longer period of time. You'd probably even leave more on the table. Sometimes leaving it on the table is the best thing to do, or it's the only choice you have because you need the income. But just be aware that it doesn't matter. Anytime because there's no free money, if you're doing an income or an income strategy, covered call spread, whatever, it's not generally going to do as well as just doing nothing. Because you have to promise, when you do an income strategy, you have to promise something. I don't know the exact mechanism of the closed end funds and how this exactly works, but it's the same thing. You have to promise something. You have to do something that obligates you to. But so yeah, you have So this one has 31% total return since 2010, where the SPY's up 514%. But this is a 5-star ranked fund, and people love this fund. There's nothing wrong with it. And you look for this quarter, it's really, really impressive. Let's go year to date. Oh, that was year to date, Jan 1. Let's go 2 years to date. Now look at that. Now on 2 years to date, it's spanking the SPY. Depends on when you got in. Let's go 3 years to date. Three years to date, I'd say the SPY, I never look at dividends reinvested, just this one right here. 3 years to date, the SPY, it's 67 to 55. That difference is about 25%. CLM left about a quarter of the money on the table. Here's the other way to think of it. You left a quarter of the money. Okay, forget about selling options obligates you to do something. You leave a quarter of the money on the table, but you're getting paid monthly along the way. So you're getting your money early. Okay, so that's the trade-off. But yeah, you're going to look at it here 3 years down the road. Even a really good 5-star ranked income strategy like CLM is going to leave money on the table. Let's look right here at, and nothing wrong with it, but let's look at QILG over the same time frame. Now, this is a good looking fund. I like this fund. Oh my gosh, I like this fund. Problem with this fund is it only pays 6%. So you didn't leave any money on the table versus the SPY. And that's rare though. That's just that one time. If I do other time frames, it will leave plenty of money on the table. Like that one on that time frame, 3.5 years, you left a good third of your money on the table. You performed about 33% worse than just not doing anything. But that's why it all comes back to, do you need the income? And then even if you do, we're going to use the lowest amount of these we need to get the income we need. If you care about future growth, maybe I'm the only one that cares about. I want my portfolio to grow even after I'm gone. I'm trying to leave money past where I'm at. I'm hoping to. I don't know. It's not no guarantee, but that's my goal. So in my mind, yeah, I need a little bit of income, but I want to keep, I want to keep as much of it in growth as possible. That's just me. So, but if you don't have that goal, if you don't have the goal of leaving money to your family or whatever, maybe it's not as big of a deal. Just go ahead and get whatever you want. But I'm looking at it as I'm investing for my heirs also. And I don't want my heirs to be watching this video and they go, look at Grandpa. He got us Tesla and now we're freaking having to work at Walmart. Look at damn Grandpa. You think about it. We have a video record of it now. And I don't like Tesla, but I'm just saying, but wonder if it's my heirs, they're going to be saying, look at Grandpa. He was all in on ULTY and now and we don't have any money now. I don't want that to be me. So I can be all in on ULTY, but it's not going to mess up my kids. It's not going to mess up anything beyond me. All right, let me see what you guys are talking about. Cornerstone yields 20. I just took the past year. That was just what I learned in the past year. What did I say? But anyway, if it's a number different, it's just because the number is what it's actually doing. But yeah, so whatever, it earns 20, whatever. Okay, there it is. CLM. I have it down for 15, but that's because that's how much it has earned this past year. That's on a trailing 12-month basis. So, that's maybe not the yield on cost, or, it may not be totally accurate, but that's how much it is earning right now. And when they pay a new dividend, it will put the new dividend, there'll be a new trailing 12-month. And as time passes, and this could change, but that's why it has 15 in there, just because I guess that's just the way the math worked out. All right. Let me see what else you guys are saying. Okay, Max, if you drip at the now, okay, yeah. Well, and I'm glad Brad's just trying to explain it to me, I think, so if you drip at the NAV, you get an extra 17%. Okay, that's right. And I'm a big believer in dripping. So yeah. I think the extra 17% though, will that not show up on these charts where we look at total return? No, it won't. It won't. So anyway, I probably need to take CLM out of there. I've been trying to say that I like it and it's 4 or 5 star ranked. I've been trying to quantify that I'm not trashing it. Okay, and then Brad's saying, yes, Brad, 9% profit over margin cost isn't enough. My SPY option strategy cost me. Well, yeah, okay, all right. Yeah, Mark and Brad are talking about the relative merits of different strategies. Okay, I know Income Architect. He modeled what would happen if you have SPY and sell shares for income, and he claims you can go broke. Well, that's not what Mark's trying to do. It's more complicated than that. But anyway, yes, Income Architect, great influencer. I watch him all the time. Yeah, absolutely. You can go broke doing anything. I don't care. The money's serious business. You can, but yes, especially if you're selling shares, don't just sell shares, but yes, it is possible. It is possible. So that's why people on my channel, we make our shares work hard for us. These guys in here are doing the same thing YieldMax does. But because they're doing it themselves, they can alleviate or defer some of the yield maxi type problems. And so anyway, but yeah, and I'm talking about Brad and Mark are both really good at poor man's covered calls and stuff like that, and covered calls, and they're just that's yield max. They're just doing yield max. Um, so and I'm probably forgetting about other good traders in here. I mean, but anyway, but those guys especially are pretty salty. All right, Max. The CEFs probably deserve their own separate Max. Yeah, they do. Good point. Good point. Good point. I think for now I'm going to leave seal in there just if nothing else as a benchmark, so I can say we have one in there. But you're right. I don't need to start filling it. I'll leave YYY in there also because I've actually checked that one out, and that one does. I mean, yeah, I'm sure that one's a fine fund. So I'll leave those in there. But you're right. Probably not the fairest comparison. Um, Oh yeah, I was talking about income architect. I knew who you were talking about. I've been on a Twitter Spaces with him. Him and I are old friends. I was supposed to go to New York and meet him, but it didn't work out. But yeah, he's a good guy. He is a good guy. All right, guys. And speaking of that, he had an interview today with Jay and with David Nicholas from BLOX. I know we have a bunch of BLOX people in here. I'm thinking of you, Marcus, but I'm going to go listen to it after I get done with here. Okay, and then what is Mark saying? And Mark's saying, Max, because I don't use synthetics, my upside's never capped. Absolutely. Absolutely. And also the other thing is, even if you're, it doesn't matter, even if your upside is capped, what you're also doing is you're going to sit here and have it for a couple of days. You're going to wait for the time to decay to come out. The market might pull back a little bit. You're going to sell something at 4, cover it at 1, take the 3, put it in your pocket. Then the market rallies the next day back up there to resistance. You're going to sit up there and sell something at 4 again, let it pull back, let the time decay. You got it at 1. You're going to be your freaking upside's never going to be capped because you're trading it. So it's you aren't just getting alpha through the upside. You're getting alpha through the velocity of money. You're doing it the way you just keep doing whatever you're doing. I like the way you guys trade, and that goes for SB also. SB is a good poor man's um, covered call guy. But in Mar, you guys all are. Just keep doing what you're doing. Yeah, but no, absolutely, absolutely. You also don't get your upside. When I say upside capped, I mean the yield max strategies. A lot of times will put something on and just leave it on, because maybe not yield max, but mutual funds and ETFs aren't too flexible in their trading lots of times. And so those are the ones that seem to have the more capped problems. But an individual trader who's basically day trading, who's getting in and out, you're making your money through a different means also. Yes, and I agree. And you can also, and then also physically, you probably leave some open sometimes. You're using your judgment. Sometimes you want your upside to be capped because your market's going down. You know what I'm saying? So yeah, I know what you're doing. Okay, Max, what's Brad saying? If you decide to do a closed-end fund max factor, I have. Okay, well, good, good. Okay, well, if you already have that, or I could just cut and paste it in, we could put it in its own spreadsheet. Yeah, we'll get together on Discord about that later. But yeah, I appreciate it, man. I appreciate it. Well, this is a pretty good crowd today. There's 13 of you guys here. All right, and so I'm trying to make sure everyone has a chance to talk. By the way, does anyone know of a solid silver? No, I didn't even know of SLVO. So we're talking silver high yield covered call funds. I never heard of this one. Silver shares covered call. Now it's an ETN, exchange traded note, which means they aren't really selling options, but they're basically are. But no, that's awesome. I mean, it's in the covered call category. Does anyone subscribe to FinViz? If anyone does, you could just click on this covered call. I would love to have this database. It has it won't let me download it, but it has every covered call fund in the world in alphabetical order. I would love to have this, but when you hit export, yeah, you now you have to have, and I had premium for a month and let it lapse or whatever, but that would be sweet because then once you have that, you can pull it up, then you can sort it by dividend or by whatever, and I guess we can do that now. We just can't download it. Yeah. So there's the lowest paying dividends. Here's the highest paying dividends. But I would love to have this database. There's fiat at 347, crash at 138. Murney, Misty, AIYY, UL2. Look, on the highest paying dividends, look, you have to go all the way to number 12 before you find your first one that's not a yield max. And that's true to their name. That's what they're trying to do. And then you only have one, and then you have the rest of the top 20 are all yield max. Holy cow. All right. Well, I can tell Jax is getting bored. I really am going to get out of here unless I come back and there's a question or something. But no, I don't know of another silver high yield fund. I will say this though. Let's do this. Let's put SLVO on the max factor, right? I mean, let's see how it's doing. Insert row below. SLVO. All right, and then we're gonna get the beta in there. Has it been out more than a year? We'll see. It obviously has because the beta's in there. So I need to just find a way to type X, and it knows that X just means it's been out more than a year. I could also just type June 10th last year, and that'll do the same trick. All right. Well, very good, guys. So let's look where Silvo is. I mean, I guess we have to, now that I took the time to put it in, paying 21%. It's 2.7% above its 20-day. It's 4.7% above its 50-day. That's pretty good considering it just moves 1.3% a day. So it's better than some of the other ones we've been checking out as far as price momentum goes. And so it makes an overall, but the overall number on the max factor's kind of low. Well, I don't know. Anyway, I don't think it didn't have a really high number. It's going to be, oh, there it is. It's number 59. It's right there between SDTY and AIYY. I mean, right here, the holy grail factor, which is just how much it's up for the quarter, just price, no yield, and no, just NAV, 7.6. I mean, that's what's not to like. It's doing pretty well. Up 7.6 for the quarter. It's trending up. It pays a 24% dividend, 21% dividend. It's just not that different from any of these other ones out here that are also up about the same amount and pay about the same dividend. And then there's even some that are up more and pay twice as much, like WDTE. Now that's a good one. All right, I really will let you go. I don't know about the one for copper. Anyway, we will talk about it in Discord. Hey Max, if you have GDXY in the Max Factor, yeah, I just added. You saw that. So yeah, it's because I didn't know about SLVO until just now. But it's good. It's good to have it on the Max Factor. The more the merrier, right? All right, guys, I'm going to go watch that Blocks interview with Brad, Income Architect, and Jay and David. And I will talk to you guys later. It's a good show today. Thanks for being here and thanks for participating. And especially you, I can't pronounce your name, Ofer or whatever. I appreciate you asking questions and stuff, and because you're giving us a diverse viewpoint. Diversity is our strength. I mean, we want diverse viewpoints here. I like to hear all kinds of. I mean, I get the people that not everyone's going to like Alti. All right, guys, take her easy. You have a great day.